For more content on today's episode, make sure you check out the Al Nicoletti business page on Facebook, the Facebook personal page under Al Nicoletti, the YouTube channel, the Instagram at Attorney Nicoletti. I have all the amazing videos on probate, quiet title, partitions, and all the amazing guests that have been on the Al Nicoletti show. You can check it out. It's on Spotify and iTunes. All the guests, all the incredible guests, and especially today, the man, the myth, the legend, Lee Kearney on the show. I hope you enjoy. It's going to be a great one. We're going to have a blast. I already feel the energy, so get ready. Hey, everybody. My name's Al Nicoletti. I'm an attorney here in Florida, and welcome to the Al Nicoletti Show, where I bring on real estate super investors, rising rock stars, movers and shakers, and leaders of clubs in the community that educate, entertain, and inspire all things on Florida real estate, on how you could take your company to the next level. On my show today, the man, the myth, the legend, Lee Kearney, the owner of Spin, this incredible real estate investment business in Florida and conquering it all over the state and all the markets in Florida. He knows what he's doing. He's got incredible strategies and he's been in the game a while. So pay attention, listen, take those notes because he's going to drop amazing gems. When Lee speaks, he's always dropping something. So pay attention. And of course, I always talk about my guests before they come on the show, and every one of them are special, and Lee is special. He is a super investor, and he's one of the most successful single-family real estate investors. And since 2004, he has bought and sold over 7,000 properties and is known as the expert in leveraging real estate market cycles. And he owns several real estate businesses in Florida, all operating under Southeast Property Investment Network, Spin, the brand, to fix and flip properties across the United States. And the Spin flagship trading company has had sales volume exceeding $500 million. We're not just talking about any investor. This guy, he's a super investor making it happen, making money. And for Spin in 2021, a large focus of the year is on commercial development, quick flips, and raising capital to operate and manage real estate related funds. And outside of his adventures, he started the Florida Advancement Supplement Technologies, FAST. I love it. I love how he has Spin and he's got FAST. He's always on a roll. I love this. In 2013. And FAST is a spin company dedicated to the medical cannabis market in Florida. And it is a vertically integrated company that will manufacture and distribute a world-class medical product line to serve Florida patients with severe debilitating illnesses upon recommendation from licensed physicians. And he's also started what is now the Altitude Brands. Altitude Brands, the exclusive distributor in Oklahoma for Keith Brands. I mean, this is amazing. He goes through multiple businesses. He's going to talk about that today. But he's got Keith Brands, Gold Rush, Extracts, Kaboom, Boomer Vibe. I mean, he's got all that. We'll talk about this. And he's a smart guy in the real estate market. So he is a big believer in the community. And without further ado, let's welcome to the show, Lee Kearney. Lee, I mean, you don't need any introduction, man. You're the man. I love it. Thanks for being on the show, Lee.
Thanks for having me.
I love it. And I want to make sure, Lee, that today we talk about several things, and we outlined it before the show, but how you've run multiple businesses all at the same time. I don't know how you do that. What exciting projects you're working on, the mastermind you're in and why it's important for people to be in, the real estate predictions you're in, and the starting and growing a business and how anybody can do it, and how you've built a super top performing real estate team in a hot market in Florida, and the top 5 strategies people can implement today, now, that they can use to succeed in the business. Lee, welcome. Tell everybody who Lee is. Where did you start, before real estate, and where are you today?
Absolutely. So I actually started in real estate by accident in 2003. I bought a condo, hated it, put it back in the market. But I bought it at a time where the market was increasing. So I made about 30 grand on that property, which was more than the base salary of my sales job. The wheels started turning, going, I made a year's paycheck on one property. So I was hooked at that point. I said, if I'm buying something retail and I can make money, there's something to this real estate game. So I decided when I moved to California that I was going to intentionally buy properties. And so I didn't know what I was doing. So I said, basically, I was asking people, where do you find a deal? And I heard about probates. So it's actually really funny. You and I were joking about probates right before this as being the only source for distressed properties, and you being the only attorney in Florida who can successfully manage your probates. But all joking aside, my first property was a probate. I was given some advice to buy a probate. So I found an agent and I said, can you help me find a probate? It was this little old lady, realtor out in San Bernardino, California. And I said, find me a probate. So interestingly enough, at the same time, I went to church with a guy who was rehabbing. And so I said, how can I help you? Can I help you go to Home Depot? Can I help you fix houses? Like, I want to learn this business, but I also don't want to waste your time. So I helped him on some of his projects, and riding around with him, he gave me a buy box. It was a sub 200,000 right in San Bernardino. He told me where to buy it, basically buy it under 150, sell it around 200. Light repairs. He showed me which repairs to do. One of the key things I learned from him was you got to put a sprinkler system in, because in Southern California, you want your curb appeal, your flip to stand out. Green grass sprinkler system, you stand out on the block. So there was some key things I learned from him on how to do the bare minimum to get the most return. So rehab that house. I remember putting out the signs, doing exactly what he told me with the open house. Scared to death, by the way, because I'd spent 3 months fixing up this house, spent about 15, 20 grand on it, borrowed money to buy the house. And so, I'm out there, right? I'm exposed. And so sure enough, put out the signs, ran back to the house. People started coming. And this was a hot real estate market back in 2004. And about 50 people came through that house. And this guy, I remember his name. His name was Jose Chalet. I remember to this day. It was the first house. And outside my office, actually my old office, we just moved, is my first flip where I bought and sold it. That was 1423 Moore Street, I believe it is, in San Bernardino. And he comes up and he goes, I want to buy this house. And I said, no problem. So I'm thinking, man, this is great. I did exactly what I was told. I'm going to make about 35 grand. This is fantastic. So about a day before the closing, you have to disclose if there was someone who died in the property. And so we gave him the disclosures, and he called me up, and I'll never forget this. He goes, Lee, are there ghosts in the property? And I'm thinking, man, this is a loaded question. I got 35 grand I'm supposed to collect the closing tomorrow. And I looked him dead in the eye. It was a phone call. It was a phone call. And I said, so I stopped and I said, Jose, this house is 100% ghost free. He said, no problem, I'll close. And I said, awesome. So anyway, closed that deal, bought another deal. Actually, I got two things right. So I bought a probate below market value and basically hired a coach. But where I went wrong, I started making mistakes right in my second flip. I moved back to Florida, and there's two mistakes I made. Number one, I had a friend do the rehab. So that turned into a 6-month project for about a $12K rehab. And then number two, I tried to manage a rehab from out of state, and I didn't have the experience with the team to do that. So basically, I got my ass kicked on that property, still made maybe 10 grand, but I learned a lot of lessons on what not to do. Moved to Florida in 2005, started asking a lot of questions. And I'm going somewhere with these detailed stories because I really want people to know, like, this is where I started. So there's no dumb question, by the way. When you don't know, it's not a stupid question. You got to ask the questions, and don't be afraid to ask questions and really understand the business. So I started asking my network down in Florida. I said, where do I buy below market value properties? I realized early on in real estate, the money's made in the purchase. I know people say that as a cliche, but I can further clarify that. If you can learn how to consistently buy below wholesale value properties, you have every exit in the world available to you. You can wholesale it, you can retail it, you can rent it. And a lot of people right now are just ignoring those principles and just making deals work. And once the market shifts the other direction, it's going to wipe out a lot of people. So back in 2005, one of my friend's fathers was buying at the courthouse steps. I said, okay, what's the courthouse steps? He goes, it's a foreclosure. What's a foreclosure? And so the only thing I knew back then was probates, right? So probates was the key to life. Now I discovered foreclosures. So I'm thinking, man, this is awesome. So when down there, it was a live auction. It was like a bunch of used car salespeople. Just everyone was fighting and nodding and winking and clicking their fingers and calling. There was numbers being sold. Literally, it wasn't even a house. It was just they would announce a number and someone would buy a number. So I had no idea what was going on. So it took me about 2 weeks to figure out, okay, there's a book. And this lady, Tamara, was selling a book. So I said, okay, can I buy your book? And so the book actually turned the case numbers into addresses. So I spent my mornings driving properties, my afternoon bidding. It was probably about a month. I bought my first property. didn't realize I bought a homeowner's lien because I paid $7,000 for a $200,000 house. I'm thinking, man, is everyone else dumb here? It was subject to about $140,000 mortgage. And I was so green. I'm laughing now telling you this. I had to fund the property the next day, but I wanted to know the payoff. So I tracked down the previous owner and said, can I get your social security number so I could log in and see what your balance is on your mortgage? The guy gave it to me. The guy literally gave it to me. I guess I just was so green that he could tell that there was nothing nefarious about what I was asking. I literally just wanted to see what the balance was. So I made sure the mortgage wasn't crazy. Actually, it was cool because I leveraged buying a $200,000 house with someone else's mortgage for $7,000. Did really well on that. And man, I look back about 12 months later, I'm one of the biggest buyers at the Hillsborough County auction. You know, this idiot in ripped shorts and baseball caps sitting at the back ends up starting to buy a lot of property. So by the end of 2006, our volume had significantly increased, but I made a couple mistakes. I was buying at the peak of the market. And this is why I warn people. Everything that I bought and held in 2006 and 2007, I gave back in 2008 and 2009. So I say this to scream from the mountaintops to everybody. Ignoring market cycles will catch up with you. And people forget that you buy low and you sell high. Right now, people are buying high and making deals work and using leverage and low interest rates and all kind of excuses. But ultimately, for your rental or your buy and hold property to survive the test of time, you got to have equity. You got to bought at the right point of the market cycle, and you've got to not over leverage it. And the problem is the higher you buy it in the market cycle, the lower your debt coverage service ratio. And that's what kills people. They just don't have enough money to service the debt because they bought at the wrong point in the market. Just to give you an idea, we sold on average every rental property that I bought between 2009 and 2012, 13, we sold for 2 to 3 times what we paid for it.
Wow. So
basically we could be the worst property managers in the world. We didn't have to get everything right. We bought it right. So therefore the market made up for a lot of our mistakes. Right now, if you're buying at the peak of the market, you got to get everything right. It's got to be the perfect tenant, the perfect property management. I'm here to tell you guys, no one's perfect, which means you screw up one of those variables. In fact, I left an IMN convention a few weeks ago, and what they were touting from the stages on every major speaker was a 4% cap rate. And I can tell you, you can't make money on a 4% cap rate. It's just not possible. You're not going to cash flow. And so I just really try to warn people, there is going to be a shift in the market. I mean, in fact, I looked at Jacksonville earlier today with my team, 22% in the last year. Tampa, 25% in the last year. I mean, this is unsustainable. So one big lesson I learned back where I made a couple million and lost it was market cycles are wildly important. I also realized a mentor. If I'd had a mentor, he would have told me, just wholesale, stop fixing and flipping, stop buying rentals, unload your portfolio. The crap's about to hit the fan. And that's the same message I'm telling people now, like, get out. You know, you've got time. The market gives you plenty of warnings. And you and I were speaking before the show that we're already seeing in our live data, which is updated daily, that we're seeing Zillow values start to slide the other way in several markets in Florida. And that's live, hot off the press data from the last week. So I'm keenly aware of what can happen. When the music stops, it just stops. And we got a warning, all of us last year with COVID. Back in March, April, the capital literally dried up overnight. Everybody pulled their money off the table. You couldn't get a loan. You couldn't get a refinance. I mean, the money stopped and really stopped the market in its tracks. The crazy part is that it started back up with a vengeance, and now we're up 20, 30% in literally 12 to 15 months. So it's definitely been a weird year and a half when I look back at what's happened since COVID. But I still believe, even though we've got this COVID lift or whatever you want to call it, due to lack of supply and lack of foreclosures and moratoriums, we're in an over leveraged market. The market value is far exceeding the intrinsic value of properties, and it's gonna reset. There's definitely gonna be a reset. I even look at rental prices. I moved to a new apartment. I'm paying Miami rental prices. I mean, $4,000 for a 2-bedroom apartment in Tampa, Florida. I mean, This is just it's an unsustainable market. And really, the litmus test, when an average family can't afford an average home, the show's over. And we're getting to that point now. You're starting to see articles where buyers want to buy a house but can't buy a house. So now if you're trading up, you can, because you're just paying for the difference and you're getting a low interest rate on that. But for buyers entering the market, it's extremely tough in primary markets like Tampa, because the median price, I checked it today in Tampa, 330,000. That's a lot of house for a new home buyer. So definitely right now, what I'm telling everybody, get really good at acquiring below wholesale properties, because that way, if the market's going up, the market's flat, the market's going down, you always have an exit. And the timeless strategy here, if we want to talk about strategies in real estate, is wholesaling. Wholesaling will survive any market cycle. Why? There's always buyers and there's always sellers. They just shift. The seller shifts in a downward market to being the institutions. Right now, it's the homeowner. And I watched the same cycle 15 years ago. We went from going seller direct. Then when all the sellers became upside down and the market started shifting, we started buying for the banks. I mean, the same thing's going to happen again. So the process of wholesaling doesn't change, just the seller changes and the buyer changes. Right now, hedge funds are buying everything. As soon as the money stops, they're gone. They will leave the market instantaneously, as quick as they came. And then the sharks come out. The savvy investors that have been sidelining their money, the professional real estate investors will come out and they'll gobble up these properties, but it's going to be at a much lower value. So, I mean, I'm fully convinced of this. I think the one difference between this cycle and last cycle that's huge is that institutions have securitized and really turned single family into an asset class. So those kind of B grade properties, maybe C plus, that would be more insulated because there's an institutional backdrop for that. But the normal rental grade and below and luxury properties are going to go through the same cycle, in my opinion, that they did last time. So it's going to be interesting. The next couple of years are going to be very, very interesting.
You're right, because I was on the phone with an investor yesterday, and they were talking about how they were trying to, they're a buyer, they're an end buyer trying to do flips and fixes, and they were trying to go to some wholesalers, and they said that they were getting beat out by the hedge funds. So the hedge funds right now are making that play on that property, and the prices are just so high. So you're right, you better know what you're doing in this market. But you saw 05, 08, 2020, and now we're kind of the inventory is at an all-time low. Where do you think people should be focusing on market-wise? Like, what should the investors, a savvy investor, be doing now that they can prepare for that next market cycle? Because, like you said, the mortgage foreclosures, that'll all come back, right? That's not like a thing right now, or maybe it is, but what's that cycle? What's that thing that they should focus on?
Sure. At the peak of the market, you want to be trading assets. And so you want to buy at the bottom, you want to control at the top. So controlling assets, wholesaling, owning stuff short term, that's the play, because being a seller is the right side of the trade. Being a buyer is the wrong side of the trade. Now, if you're being a buyer to trade an asset, that's not what I'm speaking about. I'm talking about being the end buyer. You want to be the seller. You want to be the person moving the asset, sitting in between the deal. You don't want to be the person holding the bag. So that would be number one. When you think about institutions, you and I can't compete with an institution, so we work with them. So the best way to work with an institution is buy stuff for them. Be a seller. Find out what they want and give them those properties. Again, like you said, in a lot of cases, they're the highest buyer in town by a mile. So find out what they're buying and sell them properties. I've never believed in fighting a market. I always want to look at what direction the tide is moving and figure out how to monetize that. I look at the market, look at the opportunity, and figure out how to capitalize. I used this analogy before. Imagine standing up with a paddleboard or surfboard and holding up against the wave. What's going to happen? As soon as the wave comes, it's going to knock you over. That's exactly what the real estate market does. But so many investors think they're smarter than the market, and they've got some creative strategy. And the reality is the market is bigger than any one person, any one company, any institution. And so we have to figure out where the market's going and make sure that our strategy is in line with that. And right now, being a seller is the right side of the trade. Being a buyer is not. And again, people justify it with all sorts of nonsense. And we're buying at the peak. Don't buy at the peak. Control assets at the peak, buy at the bottom. Wealth is not created at the top of the market. That's not where you get wealthy. You can get rich at the top of the market, but you create wealth by buying assets at the correct point in the market cycle, which is not right now.
Gotcha. So with knowing all of that in mind and knowing that cycle is just so high right now, we talked about this backstage, but what are the top 5 real estate strategies that investors, professionals can implement today in their business that they can use to succeed in this hot market?
Sure. So first of all, we want to talk about the overarching skill set. The overarching skill set is buying assets below wholesale. So that's what you should be focused on. Now, if we go a layer deeper on that, the only way to do that in a hot market is by going off market versus on market. So if we go a layer deeper than that, even with stuff that's off market, if the seller is not distressed, you're more than likely not getting a deal. So what we've said is, okay, for us to survive any market cycle, we need to buy below wholesale. Got that. We want to differentiate between distressed and non-distressed. Why? I want every seller I talk to have to sell a home versus me having to convince them. So we only go after distressed sellers. You talk about the top 5: death, divorce, distance. We call it the 3 Ds. And that's really the things that we've identified that correlate. And when you have all 3, and what I mean by that, if you've got a person who died, so you got a probate situation, and typically our best probates, just I guess to put that out there to people, the best deals you're going to get in a probate is where they haven't started a probate. I want an unorganized estate where nobody gets along and you come in and you sort out everybody's problem. The problem is once there's a personal representative appointed or they've gone to an attorney, now they're trying to get max value for the property. So we actually like probate properties that where the probate has not started. That's our wheelhouse. So we talk about distance. I want them not living in the property. They're disconnected. So now it wasn't their house and they don't live there. So they're not interested. There's 2 kinds of sellers that are our avatar. One's people that are extremely distressed. The other avatar, people that just don't care. And so we realized several years ago that we don't have to go after people that are just distressed. We try to identify people that just don't care about the property, because when they don't care, you can give them $1,000 and they don't care what you make. They don't care. It's just free money falling out of the sky. We also look at other forms of distress. So we talked about foreclosure. We talked about death. We talked about divorce. We talked about distance, code enforcement issues, taxes. So we're looking for people that have a distress either in their life or related specifically to the property. And that's the only people we go after. So once we've done that, again, we talked about buying below wholesale, distressed versus non-distressed. I gave you a short list of distressed. The next thing we do is saying, okay, we can make a little money or a lot of money. And I've decided we only want to make a lot of money. So we actually weed out all of the low equity properties. And so now, if you think about this little journey we went through, we've got distressed homeowners with lots of equity. So I don't mind that my competition is picking off $5 and $10 grand wholesale deals. We're busy picking off $50,000 deals. And so I have to do a lot less volume and can still make a lot more money. And we've really realized our niche is understanding data, understanding how to find our avatar, what our avatar looks like. And our avatar is not the house. And a lot of people get this wrong. They're looking for a structure. We're chasing sellers. Now, when the market shifts and you're going back to buying from the banks, it's all numbers. So now, yes, you want to get numbers. You want to identify the asset type, especially if you're buying and holding. You want to figure out what your perfect rental looks like, for instance, and that's going to be a completely different game. But if you think about the fact that we just want to control assets at the top of the market, do we care what we're buying? No, we just care that there's a delta between the wholesale price and where we can buy it. And we literally, that means we can buy land, we can buy commercial, we buy multifamily, we buy single family, we can buy condos, we can buy townhouses. Ultimately, it's just a widget that we're buying below market value and we're moving very quickly or never even owning at all.
Incredible. Those are things that people can do today. Like all the probates, all of that stuff is out there, public record. It's a matter of how you tackle it, right? Like how you go after it, how you approach it. And you have a team at Spin that really is grinding and doing stuff. And we'll talk about how you're able to make that a super top performing company. But what are those marketing strategies that can help? Because going after high distress, high equity, and people that have no sentimental value to the home, or the code violations, nobody's even in the home. What are those simple marketing strategies to even get there?
Sure. So there's 2 ways you can approach that. One, if you're literally starting out, you can grid off major intersections, just drive every street and mark every house that looks abandoned or, has grass that's 6 feet tall. So that's literally, I've done that before, and I've sent teams out to do that. So that's one way of doing it. The other way to do it is through data. So you don't have to drive any properties. You can just pull data. So you can go to code enforcement. Most municipalities have it online. Find out who's got code problems on their properties. Divorce is easy to find. In fact, when I filed for divorce, I got several messages going, "You just showed up on my list." So I thought that was interesting. But yeah, literally I had several people. The day it was filed, I got a whole bunch of messages from people who are farming the divorce list. So I know people are doing that. Death, we talk about. So probate's a little bit different. I want to go a layer deeper on that. So you can research probate several different ways. You can literally follow death notices. Now, there's a fine balance. I want to make sure I'm really clear on this point. We got so dialed in on our death notices that we were calling people that hadn't even buried their loved one. So we said, "Whoa, okay, we're too like our fingers on the trigger. We're too trigger happy with this one." I mean, we had several instances where they hadn't had the funeral. So we dialed that back and realized, okay, there's got to be a little bit of time there. But ultimately, our sweet spot. Now, I look for properties that are in free fall. So I'll describe to you what I mean. Someone has died several months ago. There's code enforcement issues, and it's in foreclosure, and they're not paying the taxes. Because what that tells me, and what it should tell you, is nobody's managing this asset. It's just floating out there. And you're very likely to get a disinterested seller, which is the perfect seller, because if they don't care about the property, usually the price comes down. So we've gotten really good at identifying properties that have multiple forms of distress, which typically means that you don't have just a distressed homeowner, you got a disinterested homeowner. So, and the reason I say disinterested, if there's a ton of equity, because remember, our list is just people, no one in their right mind would actually leave $100,000 in equity on the table. So you're already dealing with a unique situation. And I've really described that to our team that we're not dealing with logical sellers. So using logic doesn't make sense. We try to figure out what they need, not understand why they got in this situation. We just want to know, what do you need? And a lot of times we'll strike a deal by just asking the question. They'll say, "Well, if you give me $10,000, I'll go away." They could be leaving $100,000 equity on the table. So what I would say to you, just really that the listeners out there, focus on properties that are not being managed. And that's really, I think, a sweet spot that a lot of people ignore. The traditional list that most people go after is the absentee owner. But what you're dealing with is a landlord in a lot of cases that owns several properties, is well aware of what their properties are worth, and you're not going to get a home run on a deal like that. I get these calls and texts all day long, all day, every day. I'm like, you're never going to get a deal from me because I'm going to sell for market value, whether that's wholesale or retail, whatever market value is, that's what we're going to do. And that's what a lot of people are traditionally taught to go after absentee owners. So what they're actually ignoring is homeowners who live in their home with several forms of distress. And so that's probably one of the biggest pieces of misinformation that's out there, is teaching newbies to just go after absentee owners, because that's not the correct approach. You want to look for distressed homeowners, and that set includes people who live in the home and people who don't live in the home. So I really kind of want to clarify that, because I see that misinformation being put out, and then everybody goes to ListSource and is pulling the exact same list, which is 50% equity and absentee owner, and then 200 people pull the same list, which is why the homeowner is getting 200 calls from the same people who don't know what they're doing, and people wonder why they're buying these lists and don't make any money. And that leads me to my next point. You're going to make a lot more money taking a big list and scrubbing out what you don't want and getting it down to a small list and putting a lot of attention on a smaller list versus just the spray and pray approach, which is, call everybody and just see if something sticks against the wall. So that's been our experience, especially you talk about a competitive market. We're able to compete because we go after stuff in the first place that other people don't do, and we go after a much smaller list. So we're putting an entire team on a much smaller list of properties and sellers versus our competition who's just making one call to 1 million people.
Yeah, focus on that niche. Focus on what you really want to go after, like you are, versus just shooting and you don't know where you're going to get if you go for all of it. So focus on the niche. And And I like what you're talking about with the distress stuff. It's amazing because this is a never ending business, right? There's people that are going to take care of their homes, and there's going to be people that just don't know what they're doing, and they're going to let their home and let the roof cave in, let the grass go tall, and they don't know what to do, and they're going to eventually sell. And then you have the ones that are not in the property. So it's really, they're out there. Sometimes they can be a mess, right? Like sometimes there's title issues and weird things that come up, but that's why you got to put the brain power together and find the right team and figure out what those problems are. And those can be big gems in that area. But Lee.
Can I stop you on that point real quick?
Yeah.
So part of the team you need to assemble is several attorneys. So Al, we use you for, I would say 99% of our probate work at this point, but we also have someone who's really good at quiet title and litigation, because a lot of times, like you said, you can take care of the probate, but now we've got title issues and we need someone who's very proficient. So part of the power team is building out a team of attorneys that are really good at what they do. Al is focused on probates, so he's gotten really good at probates. We've got other attorneys that focus on writ of possessions, just getting people out of the properties. And we use them because they know how to process people, move through the court system fast. That's what they do. I've got other attorneys that specialize in quieting title, fixing title issues that have been out there for years or decades. They know how to navigate the court system and clean up title. So one thing that a lot of people forget is just building out that power team. Good title companies, good attorneys, realizing that there's different attorneys that specialize in different areas of law, and making sure that you hire the best. And I can tell you, just, for the listeners out there, and this is, factual, our probates have gotten a lot easier since we started using you and your firm, because you've specialized in just that. We were using other attorneys that did several things in their practice, and they're taking a lot longer, more complicated. And so now we've been dealing with a specialist. It's a win for you, because you get to process a lot of the same files that you understand really, really well. And it's a win for companies like us, because that takes a hassle off of our shoulder. We can focus on what we're good at. What we're good at is data and finding distressed sellers and negotiating really good deals. We're not probate attorneys, and we're not trying to be.
And I got to tell you, Lee, it is so much fun working with Spin on those things, on those weird and the different, like those puzzles. They're never ending, and they could be 1, 2, 6 probates, but nonetheless, there could be a solution behind it. And I agree, having that niche, that specialization behind that stuff can be big time stuff, right? Because if you got a specialist in it, you can solve those problems. So I love it. I appreciate that. I love the probate niche, and you know that.
I do, and on that point, we've specialized and we work with specialists. That's why the business works well together. And even within the organization, people get really good at what they do. So our business is set up like a production line. I've got one person that does pre-acquisition, and then it moves to acquisition, and then it moves through marketing or through the construction department, back through dispo. So you've got a logical process. And so when you talk about how we find these sellers, I have a data team in India. And then when they're done, they pass it off to the openers in the Philippines. When they've created an opportunity, it goes to the closers in the US. Once we got a contract, it comes into my processing team, then moves through the spin process at that point. So, it can be done. A lot of people try to overcomplicate this business. I look at something like McDonald's, and if you ever look at the back of McDonald's, you'll see that it's just a production line. They pull the meat out, they put the bun in, then they click the ketchup, and they click the mayo, and then they throw the cheese on, then it goes to the next person, gets packaged up, put in the bag. It's really, they've created jobs that they can slot anybody into, and they can do that job immediately. And then when you're building a business, you want to make sure that each process is easy to understand and you don't overcomplicate it. And then you can really scale. Having systems and processes that are easy to understand is a big part of being able to scale. Not having hard processes and having things that are extremely difficult where every task is unique. You want to make sure that you standardize things.
So let's talk about that, because Spin isn't just a company, it's a super performer, right? So what are those systems and implementations and things that you've done in your business to make it a super top performing company? CRMs, building teams around you, hiring the right people. What is that like? How have you done that?
Sure. One of the big game changers for us in the seller direct model, which is what we shifted to a couple of years ago, once the institutions stopped having inventory. So we were heavily focused on the institutions for several years, but once they stopped foreclosing and equity started rising and prices, then there was no distressed inventory, because a lot of people that were underwater, as values rose, end up starting to have equity again, which means that they could hang on to their properties. So once we shifted to a seller direct model, we developed Salesforce, and Salesforce has been a fantastic tool for us. Again, it's not even just about the best people. It's the best people, the best systems, using the best tools. And Salesforce has been a great tool and really been able to help us manage those leads and all the conversion rates from a lead down to an opportunity, down to a contract. So don't be afraid to invest in your tools. A lot of people just want to try to go cheap on that stuff. And then they wonder, they're basically, tripping over dollars to save pennies, and it doesn't make any sense. You want to focus on one deal right now, even if it's a wholesale deal, it's about 20 grand for most people. So, make sure you're not trying to save $100 and missing out on a 20 grand deal. That's what I would really strongly encourage people to do. I'm not encouraging spending a bunch of money, but spending in the right places. Don't spend it on a brand new office and furniture you don't need. Spend it on tools and systems and software, so things that will allow you to scale.
Yeah, because you have to have those systems. You have to automate it, and you have to hire the right people and have a great strategy, because you have a great team, right? Like I can see the whole team and the different pieces and places that they're in. So you have a mind to think about what your strengths are. You're there. So you know how to build that team. And it's impressive with what you're doing with Spin. Sure. And what's also impressive is how you're able to not just have Spin, but all these other companies that you're able to run. So Lee, aside from the real estate, how are you able to manage all of these other companies that you have on a daily basis? Like, it can't be easy to do. You got to go through your emails and respond to different people and switch mindsets. So how do you do it?
Sure. I had 3 or 4 email addresses at one point. Now I've got 2. I'm maxed out with that. So the key is to block out time for each thing you want to focus on. And also realize that if you're not willing to block out time, is it really that important? So the only 3 things I do now are real estate. And again, in real estate, we've really narrowed it down to primarily this seller direct model, because we can process a lot of widgets. We understand that. I've got the team to do it. In cannabis, we're actually opening up in several states. So we're now a multi-state operator. We're in Oklahoma, just launched in Missouri. We'll be launching in Mississippi. And we're applying for a very large state license that we hope to win and get awarded in the next several months. So, the cannabis space is definitely heavy in the growth phase. Also, in managing your schedule, you got to understand which stuff is in the mature stage, which stuff is in the growth, and make sure you're putting the time and effort into the business that's in the growth phase. And beyond that, where does the true revenue lie as far as wealth? So for us, cannabis is a big payday on our exit, but our current income today is created in real estate. So another thing that people forget is you can go broke making money or building a business. You want to make sure that you have a business that produces a current income, and also have an element to your business. This could all be within real estate, by the way. So you could have all of this. You can have your fix and flip and your wholesale business that generates your income. You parlay those profits into rental properties. The issue is right now, just like I did 14, 15 years ago, I parlayed all my flip profits into rentals that I lost because I bought them at the end of the market cycles. And this is a big lesson that people have yet to experience. And I would say that where the people are most likely to get caught with their pants down are people that enter the market in the last couple of years. They see this crazy market. They think that that's how real estate is. They put a rehab on the market, think they're the world's best rehabber. They don't realize they're the only property for sale for a mile radius. So therefore, they're going to get 50 offers because there's nothing else on the market. And so that's what, be very, very careful on putting all of your profits back into real estate at the peak of the market. And this is why I encourage people to control assets and not own them. I've got holdings overseas. I now have a business in cannabis. I make sure that this time around, we're not getting caught out.
Yeah, hit the market at the right time and make sure you're in that right market. So when the market comes back in full force, it's going to be amazing. So Lee, what would be one project or 2 projects you're working on right now that you're super excited about? It's up and coming. Share it with us. Like what is happening?
Sure. I kind of nerd out on the data side. So for me, we've got a meeting actually every day. There's 2 things I do in real estate where that's my job. One, is going over the pre-acquisition. So anything that's pre-contract, we go over how it moves from our openers to our closers, the text messages, the sequences. So I have one meeting on that. Actually, it's about 3 times a week, usually Monday, Wednesday, Friday, about 3 meetings a week, just on making iterations. And that to me is super exciting because we can make one iteration that immediately gets a contract the next day. And that's a really good ROI on my time. So that's one part of the business I really, really enjoy. The other part of the business where I'm on every day is our sales meeting. So with our closers, we call that deals that are right at the table. I'm on that meeting every day, and I really, really enjoy the sales process. So that's something I'm passionate about. But I like building systems. I'm a builder, and I like the sales process. So that's the 2 areas where I can impact our revenue. And then the cannabis side, that just entire business is exciting, to be honest with you. Everything we're doing, the numbers have a B behind them instead of an M. So that's a very, very exciting business.
That's great. That's great. And all at the same time, while you're doing this, you have the Advisors Council, that mastermind, and you're running that group also exclusive. Talk to us about that and why it's so important for investors, real estate professionals to be a part of that networking, those little masterminds.
Sure. Well, first of all, I would say, put my group to the side. There's a lot of people that are now overnight experts. They're overnight experts on car rental businesses. They're overnight experts on crypto. I mean, promoting cryptocurrency as an investment, I mean, I can see lawsuits flying left, right, and central when you're promoting an investment like that. I mean, it's very speculative. I've been in crypto for many, many years. And so these are the kind of things I share with my students. I'll say the things I'm good at, cannabis and real estate. These are things, both 2 businesses have had more than 5 years experience. Here's what I do with crypto. But by the way, this is just a moving target. It's very nebulous. It's very speculative. And I try to make sure that my students come along with the exact experience of what I'm seeing live in the market. In fact, I showed them an entire list of properties that we identified just in the last 24 hours that have a Zillow value trending the wrong direction here in Florida. So, I'm trying to wave the flag going, hey, the peak's hit, get ready. Things are about to shift. The other thing we share, like in our group, we'll look at data, market data. One thing that people ignore, the 90-day delinquencies are almost at 2008 levels. And that's the thing that nobody's talking about. What's happening? Yes, they are. Now, if you look back in history, typically there's a huge correlation between foreclosure numbers and 90-day DQs. Right now, you've got 90-day DQs up here, and you've got foreclosures down here because of moratoriums. So we're in a very, very false sense of security right now. And once they turn back on the foreclosures, it's going to be very, very interesting to see. But there's literally millions and millions of properties that are 90-day serious delinquent properties. In fact, they point to all these people in workout plans. So that looks like a really sexy number, right? If you actually get into the people that are in workout plans, about 90% of people in a workout plan are on their multiple time of doing that, which means that they haven't made a payment since last February. So the banks have staged them as being in a workout, but the reality is they're just not paying. And so there's a lot of misinformation out there. And if you really start doing your research, you'll see that banks are now stacking cash. They're now pulling lines of credit off the table. If you actually really look at what's going on, banks are now tightening their belt and they're getting ready for what's coming because there's going to be a shift in the market. And once the moratoriums on rentals, there's a whole slew of distressed inventory there. And there's another big chunk of distressed inventory in single family borrowers that just haven't made a payment literally since last February.
So the wave is coming. The way it hasn't even started yet is what you're saying.
The wave is coming. What's going to be interesting to see is where the support level is. So you've got a couple things right now in Florida, for instance. You've got a huge backlog of demand that needs to be met. So first of all, if you look at economics 101, supply and demand have to meet for prices to even stabilize and start going the other direction. And then once you get into an oversupply situation, that's what's going to compress price. Then the other X factor, if hedge funds are buying at a 4 cap and things tighten up, are they going to buy at a 6 or 7 cap? So trying to understand exactly where their support level will be a huge dictator of the market, in my opinion. This market cycle, where they dictate the support level is where the rest of the market is going to follow suit. Because the principal substitution kicks in real estate. You can take the same dollar and you can go anywhere with it. So that's why, price, you have a market price because people look at where they can spend that dollar. And that's why properties in nicer areas go for more money than properties in areas that are not as nice. But I really do believe that where the institutions set that support level is going to be a big dictator of how much the market's going to fall next cycle.
And all the data's out there, right? It's just a matter of analyzing it.
Yep.
Yeah, I remember when we were during the pandemic, Kyle and Pat at Yellowbird, they were holding some of the Zoom meetings. And when they finally went back, they were talking about where the market's at, the inventory is at an all-time low. And it's crazy to hear how it's going, like where it's heading, this backlog that's just sitting there and that wave is coming. And it's a matter of what's the next move, where's that support. So I love hearing about the predictions, Lee. Lee, this has been awesome. Thank you so much for being on, talking about these things. I love it. You're a wealth of information. You know what you're doing in the field. We're going to make sure we put all those chyrons and stuff for you up there. Lee, before we wrap up the show, final words, final thoughts.
Yes, I'm going to go back to what my mentor told me when I lost everything back in 2007. And I think it's very timely at this point in the market cycle. I think considering this is super, super important. So the first thing I would say is there's always money in real estate. So one thing that just to start out in a positive note, there's always money in real estate. My advice to everyone out there is make sure you're on the right side of the trade. There's a time to be a buyer. There's a time to be a seller. There's a time to buy and hold. There's a time to just control assets. And right now, at the peak of the market and the peak of any market cycle, it doesn't make sense to buy and hold. Position yourself. Ask yourself in every transaction, am I better being a buyer? Am I better being a seller? And going back to 2007, if I had shifted from rehabbing to wholesaling, I wouldn't have lost anything. I would have just continued to make money as the market declined, just buy lower and sell lower, and I would have been fine. So I only lost money, not because of the market. And it's easy to blame the market, right? Because the market's doing well. Everybody makes money. With any strategy, everybody makes money. But the reality is you can make money in any market cycle as long as you use the right strategy. So that's my advice to people.
I love it. And people are going to take it and run. I know people are taking notes. They will listen to this. Lee, it's been so much fun. Can't wait to keep working on the probates. Keep doing what you're doing. Love seeing the predictions. I hope you make some videos on that. I love to see some Lee videos on where the market's kind of going once a month. Like it's going here, it's going down, and the hedge funds are backing out. We're ready, everybody. So, although I don't know if you would say that because then you can go get those deals if you know the hedge funds are backing out. So, Lee, it's been a blast. Thanks so much for being on the show. I loved it.
All right. Thank you for having me.
You got it. All right, everybody, you saw it there. Lee Kearney, the man, the myth, the legend of spin companies, crushing the market in Florida. He's got so many strategies. He loves talking about the predictions. So make sure you watch this episode. All the amazing guests that have been on the Al Nicoletti Show are on the YouTube channel under Al Nicoletti. You can check out all the episodes, listen in the car, on the go, live. It's on Spotify, iTunes, all the amazing guests. And of course, make sure you check out all the videos on probates, partitions, quiet titles, the weird and the different world. That's on Facebook, Instagram, all that stuff that's coming out. So I will see you next time on the Al Nicoletti Show. Take care.